Pegler here. Look at the European market for March the 31st, 2010. Welcome to FX Bootcamp. To remind you, the purpose of FX Bootcamp is education. This is not a learned service. I'm not going to make any trade recommendations in the course of the day, but I will do is conduct some live fundamental technical analysis with a bit of luck. We could put together some good positive trade plans. Please keep in mind that trading heavily leveraged, which is always very risky business. Occasionally this leverage will work for you. Unfortunately, more times than not, it's going to work against you. So please do not trade your hard-earned money until you have a good proven track record of success using your broker's demo. Great. Admin out the way. Alright, so it's non-farm payroll week, it's Easter week, and markets are going to get a little bit thinner as the week goes by, but it is month end, so we might see a little bit of offsetting and some different things. Alright, so I'm going to keep this video fairly brief, and let's move forward with it. This is the pound Swissy 4 hour. Now, an observation here, okay? Big, fat, quick moving downtrend, price dropping nicely, Fib, right? Lower low, lower high, lower low, big retracement, marginally lower low, right? Still making lower low, so the downtrend is still intact, but the fact it made a big retracement and barely made a lower low is noteworthy. Then Fibs, right, a little higher low, then Fibs, lower low, but hasn't really gone anywhere in the way of lower lows here for the better part of 2 weeks, folks. Alright, so it's like Johnny trying to knock down the brick wall, right? Little vandalist kid on the playground, and he tries to knock down the brick wall, tries to knock down the brick wall, and eventually he's like, you know what, this is too much work, I'm going to go do something else. Alright, and that's effectively what's happened here. Pound Swissy's tried to knock down the wall, and has failed to do so, and has now said, you know what, I'm going to go do something else. And as you can see, it's broken, all of these swing highs over the last week and a half. Alright, so for me that is a pretty significant bias change to the upside. Now, if I see the weekly here momentarily, the weekly doesn't necessarily look long by any means. It simply, to me, looks like, we're potentially making a fib before we're going to try again to the downside. I've got no real reason to be fundamentally bullish on the pound or anything like that on any sustainable basis for the time being. So, this makes sense to me, pound being one of the big components, obviously, of pound Swissy, and then looking for continued downside. But what does it mean for us intraday? Well, Ray Charles can see that this is support now become resistance at around the 61.18 area. So, it's even more evident on the daily. But if we go back to the 4 hour, this is what I'd like to see now. Alright, because we've hit resistance, I'd like to see a fib of the move, right? A move fib, opposed to a swing fib. Alright, it's a little expression Chris Stevens coined at Bootcamp. So, what I'd like to see now is actually a retest somewhere in the region of this 160 area to 160.10 zone, sort of another 40 pips to the downside here, and then that sets up a nice continuation. Because if you're long there, alright, because here's the thing, if I zoom in one notch, if you get long in this zone, by the time it gets to even the fib to the downside, you're up like 40 pips, you don't really care. You move your stop to break even, you let it do its little shake and bake, and people try to short the fib and all this other stuff, right? And then it works itself out and you're in great shape, you just don't care about it, right? And then the target is the 4 hour 200 EMA at around 162. Okay, now, here's the thing, okay? If this tries to push off, if the 5 EMA comes up and this tries to push off the 5, which it's likely to do, then I think you're in danger of making a lower high here and then fibbing. You'll see that a lot, folks, and that, if this is your move up and you only make some shallow sort of 20% retracement, then what happens normally is you go and you make that little lower high. You see a reaction, then you make the lower high, then you make the real fib and continue. Okay? So, that's what I'm looking for now. If Asia can take us down to sort of 160.10 to 160 the figure, right, then I'm all about it. Then I think you have an excellent shot, a little bit of shake and bake in between to go and break those highs and then turn an EMA as the target. Alright, if we try to bounce off the 5, I do not like the long side. In fact, I'd be looking for a failure to try short it to the fib, and in that case we're going to see some pound relative weakness over the next 24 hours, and you're going to see a cable fib, which is going to create a buying opportunity in my humble opinion. Alright? So that's what I'm looking for on the pound Swissy. Euro pound is obviously the reciprocal trade, and that looks very similar, right? This is the Euro pound daily chart. If I zoom out a touch, you'll notice that we're in this we're in this overall daily range now. Okay, and prices obviously not been able to make it to the bottom of the range yet, and I think that there's probably a trading opportunity to get us down to that area. Now at that point we're going to have to take some real inventory of where we are, zooming back in here on the 4 hour. So because we have not hit support definitively, yes, we've come off a little bit of wick support here, whatever, that's not the end of the world. But what I'd like to see now is sort of a move up to 89.20 and then try to take this thing short to 88.29. Once again, if the 5 comes down and intercepts price and we try to roll off that, yeah, then there's just too much risk there. You know what I mean? Trying to trade that to the short side, yes, I'm pretty confident that we're going to go down to 89.30, but that's too much risk. The risk reward is not good in that example, and I'd prefer to just wave that trade goodbye. So I don't want risk reward looking like that. I want risk reward that looks like this, right? Overwhelmingly in my favor, so that I can be wrong 5 times and still make money on one trade. So that's what I'm looking for. In this scenario, if it goes with the 5, it's too much risk, and that trade's just off the table for me. But if we were to get something back to sort of 89.20 to 89.30, I think that that's worthwhile, pushing down to this 88.30 area. And what that's going to do is it's going to set up, if we get this price action on the euro, pound, and pound Swissy, what that's going to do is it's actually going to set up a nice short on things like the euro yen, the euro dollar continuation. You can even watch something like the Aussie dollar for a little bit of a pullback, et cetera, et cetera, et cetera. You're going to get all of these trades coming back and a little bit of dollar strength, which makes some sense. I'd also look, we've got no reason to believe it today. I'm not going to show you the chart. No reason to really believe it looking at the price action right now, but I would not be surprised to see the US yen actually go short today. And I don't think it's short sustainably, but I do think that we could see some downside to probably around 91.70, in which case then I'm looking for further longs on a much more sustainable basis. All right. So there you have it. Look at the European market for March the 31st, final day of March 2010. Please leave me some feedback. YouTube, our blog, FX Bootcamp, Facebook, whatever works for you. Thank you very much, folks, and we'll chat to you tomorrow.